Bitcoin is an emerging form of sound money. Gold has been sound money for 5,000 years, will continue to be, but Bitcoin is a digital format, a digital form of gold that's being adopted, and that's why it's outperforming gold. Don't get me wrong, it's extremely volatile, and that's the risk. How do people get hurt in Bitcoin? They buy at a top, and then it draws down 50 or 60%, and then they sell and they panic. We all agree that Bitcoin right now is the absolute best technological form of money, and what you're describing is a better one could come along, and that is true.
What if Bitcoin isn't just the next evolution of money, but the most important financial breakthrough in history? Legendary gold advocate Larry Lepard thinks so. In this episode, he explains why Bitcoin is not crypto, why it's outpacing gold, and why it represents the single most asymmetric bet he's ever seen. From its provable digital scarcity to its unstoppable network secured by math, Larry walks through why Bitcoin is the hardest money humanity has ever had, and why it might just change everything. He tackles the skepticism head-on, breaks down how to own Bitcoin safely, and shares why even gold investors should be paying attention. Whether you're deep in the rabbit hole or just starting to ask questions, this is a conversation you don't want to miss. Stick around, hit that subscribe button, and let's dive in.
So Bitcoin is, a lot of people are skeptical about Bitcoin, understandably so. Crypto is not Bitcoin. There's a lot of fraud and bad stuff in crypto. A lot of gold people say, hey, I hate Bitcoin because it's Sam Bankman-Fried crypto. It's different, okay? Completely different. They're just not the same thing. Bitcoin's a technological innovation. It's a provable network that provides digital scarcity. There are only 21 million Bitcoin that will ever be issued, and that's a fact and won't change. There's technical risk associated with it. I talk about that in the book. I think it's relatively low, but it's not zero, which is why gold is a CDS on Bitcoin. Bitcoin is an emerging form of sound money. Gold has been sound money for 5,000 years, will continue to be, but Bitcoin is a digital format, a digital form of gold that's being adopted, and that's why it's outperforming gold. Everyone knows about gold. Everyone wants to own gold, already owns gold. Very few people, or a smaller percentage of the population, knows about Bitcoin, and they're coming to see that it has some inherent benefits. Let's talk about those. First inherent benefit is you can see it digitally on the chain. It's available to everyone. It's triple entry accounting. You know how much Bitcoin is an address. We don't even know how much gold's in Fort Knox. They tell us what's there. We don't know if it's there. Second thing is it's very hard to move and translate, and transfer value in gold. I mean, you got to put it in, planes and trucks and drive it around and guard it and everything else. I can send you $1 billion. I don't have it, but I could send you $1 billion of Bitcoin in 10 minutes, and it would be fully verified. You'd know I sent it. I know you have it. So
let's test that, by the way, afterwards. If you could send me that billion, that'd be great.
I'd be happy to send you something, but not $1 billion. So in my view, Bitcoin is going to be a very important technological form of money on a go-forward basis. And as the world comes to understand it and be less afraid of it, and there's a whole chapter in the book that my wife actually recommended called Skepticism, that talks about how new technologies, people are skeptical, and I get it. But I also believe that if they take the time to truly understand it and do all the work of understanding how the network functions, all the neat features of the network, like the halving and the difficulty adjustment and a lot of other things that make it, in my view, very defensible, then they will come to where I've come to, which is it makes sense to have a meaningful position of your portion of your assets in Bitcoin. Now, don't get me wrong, it's extremely volatile, and that's the risk. How do people get hurt in Bitcoin? They buy at a top, and then it draws down 50 or 60%, and then they sell and they panic. So how does one deal with that? One deals with that by taking a modest, by allocating in the proper amount. If you put 4% of your portfolio into Bitcoin, it draws down 50%. You've lost 2% of your portfolio. Most people can handle that. And if the 4% goes up 10x, which I think it will over a decade, then the 4% becomes 40%, and you're glad you made the investment. So my view on Bitcoin is it's a volatile asset, but it has a lot of asymmetry on the upside.
Okay. Do you have a preferred recommendation on how to own it? Is it own the coin yourself, keep it in a cold wallet storage?
For a lot, yeah. So self-custody is owning the coin yourself. You can get a Trezor wallet or another hard wallet, and that's the absolute preferred way if you're afraid that the government might someday grab the ETFs the way that Roosevelt grabbed the gold. But for most people, that's a bridge too far in terms of understanding the technology and coming up to speed, although there are many people who can help you with that. For most people, the right entry period is a path is to get an ETF. I mean, when they approve the ETFs, I can now go into my Fidelity brokerage account and buy IBIT or FBTC or whatever. And Fidelity holds the keys. I don't have to worry about losing the keys or having them stolen. And I'm participating in the price appreciation of Bitcoin with whatever capital it is I have my Fidelity. And you could do this at Schwab or Morgan Stanley or wherever your brokerage account is. So that's kind of the easiest and fastest entryway, with the proviso that there's a risk there if the government ever decides to grab all the Bitcoin, that, Fidelity and Schwab are going to, they're going to obey the law and give the Bitcoin to the government, and they're going to give you cash. So, and so for those of us who are super hardcore Bitcoiners, self-custody is preferred.
Okay. All right. I'm going to start wrapping up in just a second, but let me ask you this question. I don't think I've ever asked this on air about Bitcoin, but we referenced the debate there in New Orleans, and it was you versus Peter Schiff, and his joke about your Bitcoin tie was, Bitcoin's nothing, right? Here's the question. So gold is the universe's perfect money. That we over thousands of years, we've decided that. We looked at all the other elements that were out there in the universe and said, you know what, gold meets our standard for money better than everything else, right? And we're not creating, the universe isn't creating new elements on the periodic table, right?
Yeah. Yep, it's in the Earth's
so that's gold. Now, Bitcoin, one could argue, is the best money that humans can invent up until right now, right? Correct. We've said, you know what, this has some improvements on gold, and we think Bitcoin's awesome, right?
Can somebody do another one?
Yeah. But it's a code base, right? So tomorrow or a year from now or whatever, we might think, oh, you know what? There's actually one more improvement we just thought of, right? And since Bitcoin's a code base, right? Somebody could just copy the Bitcoin code, add that next improvement on it, and now it's a better version of money. But it's Mitcoin or Bitcoin.
Yeah, what you're describing is a hard fork, and those have occurred. And basically, it is a code base, and basically somebody could come along and try and create a better form of Bitcoin. But this is where you get into the value of Metcalfe's law, which is that networks grow in value based on the number of users. And so a similar comparison would be to say somebody could come along today and create a better Google or create a better Amazon. And you've got all those users and all the interactive touch points. And is it possible that it could happen? It's possible. Is it likely? I kind of don't think so. And the reason that I don't think so is that we're too deep into the whole thing, where too many people have made their bet on this one thing.
So let me just make this comment. You can finish answering, but this is exactly the crux of my question, which is I totally get Metcalfe's law. I remember hearing it all the time when the internet was starting, and yes, there's these network effects are wicked powerful. Yep. But to a certain extent, what the argument sounds like to some people is, well, there's so much friction in moving from the existing system that we're just not going to do it. And so it's a way of saying we're going to stay with the less perfect option, right? Yeah. And if for money, should we stay with a less perfect option, or should money always be the more perfect option?
No, we should go to the more perfect option. And Adam, I would be the first, if I ever saw something better than Bitcoin, okay, that got invented and was catching traction and was starting, and Bitcoiners saw it too, and was, I would migrate. I mean, I'm always looking at what's going on. I mean, look, money is kind of it's kind of a shared illusion. It's what we all agree is money. I mean, it really is. I mean, why is gold money? I mean, it's just a rock, you know what I mean? But we all agree that it's scarce and it's beautiful. It's used for, so, we all agree that Bitcoin right now is the absolute best technological form of money. And what you're describing is a better one could come along. And that is true. But let me say that Bitcoin's got one hell of a head start and a lot of network effect and billions and billions of dollars invested in building the reusable proof of work network that secures that ledger. It is the most powerful and secure computer ledger. I was talking about this on another podcast. It really is the only thing. It's mathematical absolute truth, which is a little hard to get your head around, but it's the only thing, very much like a science experiment. It's the only thing we know. You know how math is by definition true. This is not a soft science math, right? I mean, this is a digital ledger that is, you know, recreated every 10 minutes and stored on thousands of places. So we know it to be true. Do you follow what I'm saying? And so
I do. I
so
do get
so
it.
so could there become a better one? Yeah. I mean, I'm open-minded to it.
Yeah,
I'm
especially in the
open-minded to it.
age of AI, where AI might start
Right?
conceiving of
There's
things that
no
humans
doubt.
don't.
There's no
Yeah,
doubt. And then, I mean, if you talk to Lynn, who's brilliant about this, I mean, quantum computing, I mean, it's not risk-free. I mean, there are risks to this. And you know, any investor who says they know something 100%, you immediately just throw them out as a, you know, as a quack, because nobody knows anything 100%. We're all just groping around in the dark, trying to do our best. Right?
so last question around this, and sorry to shove it in
No,
here,
it's
but
fine.
given our time constraints, I want to try to wrap this.
Fine. Fine.
So is there a potential way to combine the 100% tangibility of gold with the additional benefits that you told us about Bitcoin, where rather
Well,
than not being backed by nothing, as Peter Schiff would say, it's a blockchain system like Bitcoin, but it actually ties to, atoms of
yeah,
working.
there are people who've worked on this, like Kinesis Money, and there are others, and there are people working on this, and there are ways of putting gold kind of on a blockchain, and I think it's all kind of fine, but it's kind of like, you know, having a horse pull the car. I mean, you know, the minute you do this, I mean, the beauty of the blockchain, the beauty of the Bitcoin network is that it's decentralized and it's fair to everybody, and nobody can control it. And so the minute you go in the direction that you're describing, you have to have some central party that's going to hold the gold.
Who owns the gold has
Who
power
owns
in
the
that. I
gold
get
that
it. Yeah.
then and they could rug you theoretically. I
Yeah.
mean, the beautiful thing about the blockchain, about Bitcoin is, you know, bad actors could get involved in Bitcoin, but there's no way they can get advantage. They just can't. You can't cheat because of the mathematics of the system. You follow what I'm saying?
I
And,
got it.
and
Okay.
when you describe what you're describing, okay, but then we're back to the old system where we got to trust somebody. You know, we got to trust the guy who issued the crypto tied to the gold, that he really has the gold. See
Right.
what I'm
We got to
saying?
make sure the gold is there. Yeah,
Yeah,
exactly.
right. So it's a horse pulling a car. You might as well just drive the car.